Is Bitcoin just one massive Ponzi scheme? That's a question that critics love to ask, and maybe you've wondered about it too. After all, how can something with no central authority, no physical form, and a history of wild price swings really have value? In this video, we're diving deep into this controversy. In this video, we'll explore where this critique comes from, what critics have wrong, and why Bitcoin could actually be the furthest thing away from an actual Ponzi scheme. So stick around, because by the end of this video, you'll have all of the facts that you need to make your own judgment. And before we get started, do me one quick favor. If you enjoy watching videos like this one, where I break down complex topics in the world of crypto and investing, then make sure to smash the like button and to subscribe to my channel, because I'm going to be posting regular videos just like this one, where I help you to get an advantage in the crypto market. Now, let's dive in. Is Bitcoin the biggest Ponzi scheme ever? Well, right now, Bitcoin is actually the 7th most valuable asset in the world, if you look at it in terms of market cap. So what is market cap? Market cap is the amount or the units of something that's available, the units of a certain asset. So in the case of Apple, it's the number of shares. In the case of gold, it's a kilos of gold available on the market. In the case of Bitcoin, it's the number of Bitcoin. And then you take the unit multiplied with its price. And that gives you the total value of that entire asset. And right now, Bitcoin is at around a $2 trillion market cap. And this makes it the 7th most valuable asset in the world, just below Alphabet, which is the parent company of Google, and right above Saudi Aramco, which is the Saudi Arabian national oil and gas company. So it has already surpassed silver and Facebook, or Meta, however you want to call it. The official name is Meta, of course. Yeah, that shows you how valuable Bitcoin is today. And 2 trillion, just to be sure, that's 2 with 9 zeros behind it. So how is it possible that Bitcoin is so valuable? Well, Jamie Dimon, the CEO of JP Chase, one of the biggest and most powerful banks in the world, which makes its leader, Jamie Dimon, one of the most powerful and influential bank CEOs and people in the financial industry. And he regularly attacks Bitcoin by claiming that Bitcoin is a fraud and a Ponzi scheme. And he says that crypto is a hopeless as a currency. Okay, all right. Jamie Dimon, so he thinks it's a Ponzi scheme. Here, an article in the Financial Times, why Bitcoin is worse than a Madoff-style Ponzi scheme. So, again, another article in the Financial Times, a very well-respected media outlet, attacking or claiming that Bitcoin is worse than one of the worst Ponzi schemes that we've ever experienced. In case you don't know, Bernie Madoff, he actually ran one of the largest Ponzi schemes in New York. So we'll talk about that in just a bit. Here is an article in The Guardian. The crypto crash, all Ponzi schemes topple eventually. So basically, this journalist is saying that he probably predicted that Bitcoin was not a real asset class, had no real intrinsic value, and as a result, eventually it would have to come down. So that's what this journalist is saying. So The Guardian is, again, a very well-respected media outlet. So we have Business Insider, Financial Times, The Guardian posting all of these articles from influential people claiming that Bitcoin is a Ponzi scheme, and after every correction that it's a fraud, that the Ponzi scheme is collapsing. So what is actually a Ponzi scheme? So according to the definition of Investopedia, a Ponzi scheme is a fraudulent scheme that involves paying existing investors in a non-existent enterprise with the funds collected from new investors. Okay, so here basically on this image, it kind of reveals how a Ponzi scheme works. Here's another slide. So how does a Ponzi scheme works? It's a type of fraud in which investors think their returns come from sales or of products. They don't come from the money invested by new investors. There are no products. The whole setup is a con. So basically, how a Ponzi scheme works is you pay new investors by bringing new investors into the pyramid. So it's a pyramid scheme, basically. So you promise investors a return, and you pay those investors by attracting new people into the investment scheme. And those will then start to tell their friends how much money they're making with this scheme. They will bring in new people from their network who are hearing about all of these crazy returns. And as a result, they start to bring in more and more people into the scheme. And every layer of people within this scheme will be paid off with the next layer of people below them in the Ponzi scheme. So yeah, let's talk about a few well-known Ponzi schemes. One of them is, of course, by Charles Ponzi, which that is where the name Ponzi scheme actually comes from. So what Charles Ponzi did is he created a company called the Securities Exchange Company, in which he sold stock or promissory notes, advertising 50% interest after 90 days. So the way that he explained to his investors how he was generating this return was that he found a very interesting arbitrage opportunity. So he found a system where he could buy post stamps at a discount and then basically sell those post stamps at full price. And as a result, he was able to generate an arbitrage. And in order to make more money, he needed to attract more capital to do this in a much larger volume. So he started to attract investors. And at one point, this arbitrage opportunity was no longer available. But Charles Ponzi did not decide to stop his lucrative scheme. So instead, he kept on attracting more investors into his scheme. He was even advertising in the newspapers. And what he was doing instead of, doing this arbitrage opportunities with these postal stamps is that he took money from new investors and he gave that to investors that were already inside his organization and paid that to them as an interest. So that again, everyone within the scheme is happy, they're making money, as long as new money is being attracted into the scheme. But at one point, it all collapsed because the arbitrage opportunity of the postal stamps was no longer available. And at one point, people exposed him. People became skeptical. Newspaper articles came out exposing him. No new investors came into the Ponzi scheme. And as a result, he wasn't able to pay existing investors anymore. And then the whole pyramid collapsed. Here is another example, Bernie Madoff. So Bernie Madoff is a Ponzi scheme on Wall Street. Basically, Bernie Madoff created a company called Bernard L. Madoff Investment Securities. And basically, what Bernie Madoff was claiming that he was investing in the stock market and he was generating really nice returns. But what happens when people earn really nice returns is they like to keep compounding their money over time. So instead of taking their profits out of the market, they're like, yeah, you know what? Let me keep it in the market and let me make more profits with my profits. That's what we call the compound effect. So when people see that it's going up and up and up, they get greedy and they will perhaps put in even more money into the scheme. But very few people actually take profits when something seems to be performing really well. But what was really happening behind the scenes was that when a small percentage of people took profit, he just paid off that money with new investors' money that came into the scheme. And the way that this Ponzi scheme of Bernie Madoff collapsed was, financial markets go up and down. We have good years, we have bad years. We have bull markets, we've got bear markets. But there are very few hedge funds or investors that always perform really well. And the problem that Bernie Madoff had, or basically where he went too far, was that he never, according to his records, had a negative year or a negative he was basically always profitable. And if you understand day trading, even if you're a great day trader or trader in general or investor in general, you're going to sometimes have a bad year over the long term. That's just statistically how it works. But not Bernie Madoff. He was always performing really, really well. And as a result, he always attracted more investors because while all of Wall Street was posting bad results, he was performing on paper really good. So everyone came to Bernie Madoff. So there was a lot of inflow of new money into his scheme. But then a few clever people dug really deep into the trading history of Bernie Madoff to see if it was really actually possible that a company could generate the returns that he was generating. And they found out that it wasn't true. And eventually they exposed him. He got arrested. The Ponzi scheme collapsed. Then here, 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗲𝗿, which is the founder of OneCoin. So what is OneCoin? Basically, OneCoin was a blockchain project. The whole marketing was, hey, you missed Bitcoin, you have a second chance, you can get into OneCoin. So what happened? People were able to buy OneCoin tokens with Bitcoin, I believe. And then they promised really nice returns. So I believe they had some kind of trading algorithm which was generating nice returns for the holders of OneCoin. And they saw that their profits were going up and up and up, and people became greedy. They put in more money. They also offered incentives to attract new people into OneCoin. Of course, they used that money from new people to pay off older investors to keep everyone within the Ponzi scheme happy. And this was a scheme that basically stuck around for a while. It absorbed quite a lot of capital, quite a lot of investors, and eventually the Ponzi scheme collapsed because there was no real fundamentals driving the coin. And in fact, I believe that some investigations showed that OneCoin wasn't even actually a blockchain project. It was just hosted on a fake server simulating some kind of activity. But in the end, they said it was just one big Ponzi scheme. So they took in money from new investors, they paid it to older investors, and they just did that continuously to attract more money into the scheme. And yeah, eventually all Ponzi schemes collapse, which resulted in the fact that 𝗗𝗶𝘀𝗰𝗹𝗶𝗺𝗿, founder of OneCoin, she somehow miraculously disappeared and no one ever found her again. She's on the FBI top 10 most wanted fugitives because she stole so much money from so many people through this scheme. So why do people call Bitcoin a Ponzi scheme? Well, let's talk about that. So here you see a tweet of Peter Schiff. And if you don't know who Peter Schiff is like the spokesman for the gold industry. Basically, he is selling gold. And of course, he goes on every podcast, every media outlet. He's very active on X, and he always talks about why gold is a great investment and why people should buy gold. Of course, he's also selling gold. And now he's regurgitating what Jamie Dimon is saying. Jamie Dimon is correct that Bitcoin has no value. So the argument that people are making is that Bitcoin has no intrinsic value. That's the first argument that people are making. Is that true? Or is it false? We'll talk about that in a bit. But now let's briefly go over these arguments. So the second argument that people are making to claim that Bitcoin is a Ponzi scheme is the fact that early adopters get richer. So here you see an example of a very early adopter, 𝗗𝗏𝗰𝗶𝗶𝗆𝗃, who is now in the Forbes list of billionaires. He has a net worth of around $2.7 billion. And in case you don't know the backstory of 𝗗𝗏𝗰𝗶𝗆𝗃, so he studied at Harvard with Mark Zuckerberg, and he's part of the twins, so the Winklevoss twins, so Cameron and his brother, and they actually came up with the initial idea for Facebook. And then according to the book, the film, The Social Network, I believe it's called, I believe it's on Netflix, you see that Mark Zuckerberg was initially hired by them, then went on to steal their idea, then he grew it into Meta or Facebook, however you want to call it, and then became a billionaire. And in the process, he got sued by the Winklevoss twins, and basically they settled out of court for an undisclosed amount. And then Cameron Winklevoss and his brother, and so together the Winklevoss brothers, they went on to create Gemini, which is a crypto exchange, and they adopted Bitcoin very early. So the second argument to be made is that just like a Ponzi scheme, the people that are in the scheme early are the ones that are making the most money. Now, the second the third argument that people are making is that Bitcoin is just speculation. It's a speculative bubble, and people are only buying it because they expect that the price of it will be higher in the future. Of course, that's the reason why people are buying Bitcoin. But is it really true that it's just speculation? Is it just the greater fool theory? In case you don't know what the greater fool theory is, not that long ago, there was an auction where they sold a banana taped to the wall. And what happens at an auction? People start to bid. And the person that's willing to bid the highest price wins the auction. So what people here are claiming in these kinds of articles, that the only thing why the price of Bitcoin goes up is because there's a greater fool that is willing to pay a higher price because he believes that the price is going to go even higher. So that's kind of the philosophy behind this argument. So now I want to debunk those arguments, and I want to make the case that Bitcoin is a legit asset. So first of all, Bitcoin, compared to many of the Ponzi schemes like OneCoin or even Charles Ponzi's Ponzi scheme or Bernie Madoff, where there wasn't really any activity, they only took money from new investors to pay off older investors, Bitcoin really has utility. It can really be used for something. It is actually in El Salvador. So El Salvador recently made Bitcoin legal tender, meaning that it's an official currency that people can transact with within the country. So whenever you go to a shop, you can actually pay with Bitcoin. So it's actually being used. There's actually fundamentals behind it. There's actually adoption, real world adoption. I know here in Bali, people are buying villas or houses with Bitcoin. In Dubai, it's also possible to buy houses with Bitcoin and crypto. So it's not like a Ponzi scheme. There's actually real stuff happening underneath the hood. When you look at those Ponzi schemes that we mentioned earlier, so Charles Ponzi's postal stamp scheme, Bernie Madoff's investment scheme, OneCoin's blockchain scheme, oftentimes these investors were not able to look inside the company to really see the activities that were going on. So these creators of these Ponzi schemes, they basically create a black box. So they tell their investors, hey, you just entrust your money with us. We have a system in place to multiply it within a certain time frame, and then you receive a nice big fat bonus paycheck in return for giving your money to us. That's the way that these Ponzi schemes attract investors. But they're not very open and transparent about what's really going on. If you would ask Charles Ponzi, like, hey, can you please open your books and show me the stamps that, or the transactions that you've actually done? Or Bernie Madoff, can you actually show me the trades that you have done? And yes, of course, sometimes these Ponzi scheme scammers will show you cooked books. So they will show you fake transactions and fake reports. So it's very sensitive to fraud. But the whole thing about Bitcoin is completely open and transparent. Through platforms like Blockchain Explorer, you can track every single wallet. You can see every single transaction. You can see everything happening on the blockchain. And Bitcoin has been created with that whole philosophy in mind, that it's anti-fraud, so that people cannot, how do you say it? So that you cannot commit fraud, basically, in the ways that these Ponzi schemes were committing fraud, because everything is open and transparent. You cannot cook the books, you cannot reverse transactions, you cannot produce fake transactions. It's not possible. Then let's talk about the reason why the price of Bitcoin is going up. So earlier we discussed that some people claim that it's just pure speculation. Well, I disagree. If you've had any economics classes, I had some at high school, and my economics teacher taught me about supply and demand. A price comes into existence at a point where supply meets demand. And the interesting thing about Bitcoin is that it has a maximum supply of 21 million Bitcoin that will ever be in circulation. And the Bitcoin miners produce all of this new Bitcoin, and it will take more than 100 years for the last Bitcoin to be mined. Because every 4 years, we have a Bitcoin halving event, which means that the new supply coming onto the market is halved, so it becomes more scarce over time. And we're seeing that while the supply is becoming more scarce because new supply is becoming more scarce, but also existing investors now better understand the asset class. They're not panicking when the market dips slightly. They have a longer term perspective. You see these large companies like MicroStrategy, Semler Scientific buying up thousands of Bitcoin. MicroStrategy now owns 430,000 Bitcoin. You've got institutions like BlackRock that own more than 500,000 Bitcoin. So there's so much buying pressure in the market right now. So there's a lot of demand, and at the same time, there's very little supply. And just reasoning from first principles, supply and demand, it means that when something is high in demand and supply is scarce, then the price of something tends to go up. So that's another fundamental driving the price of Bitcoin. So what Peter Schiff mentioned earlier and Jamie Dimon, that Bitcoin has no real value, that's BS. Bitcoin has real value. And let me tell you where the value of Bitcoin comes from. The value of Bitcoin comes from the miners. So the miners, here you see a picture of me in one of our mining farms. So one of my companies is called Epic Mining. We make mining accessible for investors worldwide. And here behind me, you see all of these mining machines. We are the banking system of Bitcoin. We process all of the transactions on the Bitcoin network. And the nice thing is that anyone can participate. You only need to have one of these machines, some electricity, and knowing how to install those machines, and then you can join the network. But of course, those machines cost money, and of course, electricity costs money. So every Bitcoin that gets produced by the miners has a certain production cost, just like gold has a certain production cost. Because when you're going to mine gold, you need to invest in land, people, and machines. And by making those three investments, you will be able to produce gold below its market value. The same is true with Bitcoin mining. And that's why Michael Saylor says that Bitcoin is particularly backed by energy, because 24/7, every single second of the day, Bitcoin miners are processing transactions on the network. So much energy is backing the Bitcoin network right now. So it does have intrinsic value and it does have a production cost. So what Peter Schiff is saying and what Jamie Dimon is saying is not true. They haven't done their research properly. Then we discussed the case of El Salvador earlier on, that in El Salvador people are able to transact in a legal way with Bitcoin in everyday situations, in shops, in cafes, in restaurants, hotels. But now we're seeing adoption happen on a nation-state level. So Bitcoin went in the past 15 years from a very niche technology adopted by early tech adopters, academics, coders, to achieving nation-state level adoption. So we're hearing rumors that the US is going to adopt Bitcoin as a strategic reserve asset, just like it's holding gold. So in case you've never heard of Fort Knox is one of the safest places on earth. It's basically an underground fortress next to an army base with multiple layers of security. And that's where the US stores its gold. But Bitcoin has many of the same properties as gold, mainly limited supply, which make it a very interesting substitute or maybe addition as a strategic reserve asset in addition to gold. So that's why we're now hearing that countries, nations are getting involved. So the US is now leading those discussions, but we're hearing rumors about Thailand, El Salvador already did it, Bhutan is mining Bitcoin. So in addition to these nation states that are potentially getting evolved, a lot of it is still in the discussion phase, in the concept phase, except for El Salvador and Bhutan. But we're also hearing rumors that Qatar is potentially going to invest $500 billion into buying up Bitcoin to make it a strategic reserve asset. So there's just a lot of adoption happening. And we already mentioned MicroStrategy that's buying up Bitcoin with billions of dollars at a time. So they have actually become one of the best performing companies on the US stock market because they adopted Bitcoin as a strategic reserve asset. BlackRock is buying up Bitcoin. Many other spot Bitcoin ETFs are buying up Bitcoin. So we're in a very interesting situation. So there is a lot of real world adoption. And this wasn't really the case with those other Ponzi schemes, like, again, Charles Ponzi's postal stamp scheme, Bernie Madoff's scheme, and of course, OneCoin. So I do believe that if you compare those with Bitcoin, it's a completely different thing. So what about the early adopters? Just like a Ponzi scheme, the early adopters are making the most money in Bitcoin. All right, I think that's an interesting claim, and I get why you might say that. But here's my take. Yes, people who got in early have benefited enormously from Bitcoin, but that doesn't necessarily make Bitcoin a Ponzi scheme. It makes it an emerging technology. So here is a tweet by Ben Sigman, and he's saying, in 2024, Tim Draper made a bold move by purchasing nearly 30,000 Bitcoins for $19 million in a US Marshals auction of the Silk Road assets. So back in the days, you had the Silk Road, which was a site on the dark net where people could transact freely. They could buy, sell goods, sometimes also drugs and other stuff, weapons. And when they seized the Silk Road, or when the FBI intervened and they seized this platform, they basically got access to 30,000 Bitcoin. And they auctioned this 30,000 Bitcoin off to the highest bidder. And at that point, it was Tim Draper, this venture capitalist. And he risked $19 million to buy these 30,000 Bitcoin. Now you might say, yeah, all right, he was just lucky. No, he wasn't lucky. This was someone that did the research early on. He understood the potential of Bitcoin, and he was willing to take a significant chunk of money to bet onto Bitcoin's future. And trust me, in 2014, you probably didn't even know Bitcoin. Were you willing to bet $19 million of your own money in Bitcoin when it was such a very young and immature asset with such a short track record? It wasn't as proven yet as it is today. Today, we've got nation states talking about Bitcoin. We've got companies buying Bitcoin. BlackRock is buying Bitcoin. There's so much happening about Bitcoin. So the risk with Bitcoin is a lot lower than it was in 2014 when Tim Draper did that. So today, Tim Draper's investment is worth over $3 billion. So Tim Draper is an iconic and generous venture capitalist, not just for rocking his signature Bitcoin tie. And here you see it. There's some Bitcoin logos on his tie. Not just for rocking his signature Bitcoin tie and this unmistakable and those unmistakable eyebrows, but because he personally responds to every email and takes the time to connect and support founders. The level of care is a rarity in this fast-paced world of venture capital. So receiving a thoughtful note from Tim about the Bitcoin book along with this photo is an incredible honor. So yeah, this guy risked $19 million in 2014 to buy up Bitcoin. Now it's worth $3 billion. So he took a big risk with his investment, and that risk paid off. So does he deserve it? Yes, he deserves it. And does it make Bitcoin a Ponzi scheme? No, it doesn't make Bitcoin a Ponzi scheme. It means that he was willing and able to take the risk while you weren't. He did the research while you didn't. And as a result, he got rewarded. To give you another example, think about the internet in its early days, around the 1900s. Early investors in Amazon or Google, they made fortunes. Many of those early investors are now in the billionaires list. But does that mean that the internet as a whole is a scam? It's not. Of course, it's not. So some of those people are Jeff Bezos, net worth of $244 billion, Mark Zuckerberg, net worth of $214 billion, Bill Gates, net worth $107 billion, Sergey Brin, net worth $183 billion. Those are some of the early internet entrepreneurs, people that went on to make billions, but also their investors made billions. Are those Ponzi schemes? No, they're not Ponzi schemes. They're emerging technologies, and people that were willing to take the risks early and believed in the future of those companies and technologies, they deserve that amount of money. They deserved it because they were willing to do it. You weren't. So yes, if you're willing to take a calculated risk and it pays off, then you deserve the reward that comes with that. So why does this question of Bitcoin being a Ponzi scheme keep on popping up? Well, I believe a lot of it has to do with misinformation campaigns by the establishment. So what do I mean with the establishment? The people in power, or the people within a certain industry that are in power. To give you an example, in the early 1900s, the main mode of transportation in the US or in New York was horse and carriage. So here you see this picture with all of these horses and carriages, and you see one car in the middle of the road. And a few years later, 1913, you see a lot of cars on the road and just a single horse and carriage. Now, this shift did not go very easily. When the first car was published, or the first mass-produced car was launched to the market, there was a lot of resistance by these horse and carriage owners. They knew that the car could disrupt their business and could cost them their livelihood. So these horse and carriage owners went out onto the streets and they protested. They tried to persuade regulators to ban these cars because they would pollute the city, they would be super dangerous, and they came up with many reasons just to make sure that the cars would not take over the industry. But what happens when a technology is truly disruptive and people's quality of life really gets better? Then it's impossible to hold that innovation back. So over time, the car actually became the main mode of transportation, to the point that now almost every family around the world has a car. So the same, I believe, is now happening with Bitcoin. The banks, the governments, which are seeing Bitcoin as a threat to their livelihood, to their revenue, to their control, their power, their authority, they are coming up with these smearing campaigns like Jamie Dimon, that is saying that Bitcoin is a fraud, it's a Ponzi scheme, it has no real value. Peter Schiff, which is selling gold, and of course, there's so many people that are selling their gold to buy Bitcoin. So he's seeing a large chunk of his customer base or his assets under management now flowing away. So they love to attack Bitcoin because it makes them look better. It makes them look like the better alternative, whereas in reality, it's not. Here, for example, Bank of America analyst says there's no good reason to own Bitcoin. So of course the banks are saying there's no good reason to own Bitcoin because it undermines their control, because banks don't have anything to say. Whenever you're doing money through the banking system, they hold full control. They can freeze your account, they can do so much stuff with your money. In fact, your money isn't even your money anymore when you're holding it in the bank account. You need to beg the bank if you can please get your money back. I have experienced this a few times. In the past summer, one of the banks in Dubai suddenly froze my bank accounts for 2-3 months. And I had to fly to Dubai to fill in all kinds of forms to beg them. I went to the bank branch like more than 11 times in order to get my money released, which is absolutely insane. And I believe Bitcoin is a much better system where you don't have to rely on these intermediaries like the banks and the governments to take care of your money. Okay, let's move to this argument. So one of the reasons why critics claim that Bitcoin is a Ponzi scheme is because of its price volatility. So Bitcoin tends to shoot up and then correct down, and then shoot up and correct down again, and then shoot up. And this all happens up till now in very predictable 4-year cycles. Why 4 years? Well, because we have a Bitcoin halving every 4 years. And what happens at the Bitcoin halving? Well, the block rewards for the miners get halved, meaning that every Bitcoin mining machine produces half the amount of Bitcoin. And every time that this happens, we see a huge supply shock happening on the market. People are waking up like, oh, Bitcoin is becoming more scarce. I need to get my hands on some Bitcoin right now before the price becomes too high and I cannot afford buying up anymore. So you see a big run on Bitcoin, and this drives the price up higher and higher and higher and higher. And with all of these stories of people that are making money around you, of course you want to get a piece of the pie. So you also put in some money in order to ride the wave. And then at one point, everyone around you is making money. So you decide to sell your house and get all in on Bitcoin. And that's when the market corrects down, because the market is the prices of crypto and Bitcoin are not connected anymore with reality. So after a very deep correction, you enter a bear market. And this is where people that don't understand these cycles lose a lot of money, because they panic sell close to the bottom, and they don't take responsibility. It's hard for them to take responsibility for their actions, because it's much easier to blame the asset, Bitcoin. Bitcoin has no value. Bitcoin is a Ponzi scheme. That's why I lost money. But that's not true. You lost money because you did not do your research. Most people within the crypto space have the mindset that they just want to get rich quick with as little effort as possible in the shortest time frame without doing any research. That's their whole philosophy. And if that's your philosophy, I'm sorry, but then you deserve to lose money. Really. The whole point, if you want to become successful as an investor, is that you need to learn how to do your research. All right, so that's another reason why people tend to call it a Ponzi scheme. And when a lot of people in tandem make this argument and journalists get involved and they publish these newspaper articles, then suddenly other people start to believe it. So it's a narrative, it's a societal narrative. But the underlying problem of society is that we don't learn in school how to put your money to work and how to invest your money. That's the whole problem. It's not Bitcoin. Bitcoin is not the problem. Society, the education system, that's the problem. People's mindset, that's the problem. So I hope that you found everything up till now interesting. I gave you both sides, the arguments of the critics claiming why Bitcoin could be a Ponzi scheme. I gave you the other side of this story. I debunked why Bitcoin is not a Ponzi scheme. But you have to keep in mind, all of this is argued from my perspective. My main company is a Bitcoin mining company. And I really strongly believe in the future of Bitcoin. I have done a lot of research. I have put in my 10,000 hours to understand Bitcoin. So, of course, I'm slightly biased. I believe it, but it's based on my research, my worldviews, and I believe that you should always make your own conclusion about something. Don't just blindly take my word. So I'm really curious to hear your conclusion after all of this. So let me know in the comments below. Do you believe that Bitcoin is a Ponzi scheme or a legit asset? I'm just gonna make it super easy for you. Just type Ponzi in the comments below if you believe if you believe that Bitcoin is a Ponzi scheme after hearing all of this, or type legit in the comments if you believe that Bitcoin is a legit asset. All right, looking forward to reading your comments below this video. If you enjoyed watching this video, do me one quick favor. Smash the like button for me so that I know that you got good value out of this video. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one, where I break down complex topics in the world of investing, crypto, blockchain, finance, all with the goal to help you to cross the finish line this bull market. And if it's not this bull market, then next bull market, I will be around. All right, that being said, thank you very much for watching this video. Take care, and I'll see you in the next one. Peace out.